So, an awful lot of signs point to deflation and recession, all right? Question is, what's an investor to do? By the way, what's an ordinary person to do? Let's ask Jon Najarian, co-founder of Market Rebellion, an old friend going back many, many years, shall we say, from another network. John, welcome on set. We appreciate it very much.
Great to be here.
I'm going to run a couple charts. Let's run this Bloomberg commodities chart, if we can. John, you can have a look at it up on the full screen.
Sure.
It's a pretty sharp decline. I think it's down something like 30% the last year.
Yep.
And then let's run, if we can run the M2 chart, if we can put that up, because, well, there's the CRB commodity index. There we go, M2. We have the best producers.
You do.
Anyway, you can see the M2 chart kind of crashing down. And I guess the third one is the inverted yield curve, where short-term rates are higher than long-term rates. There you go. You see it quite clearly on the center and right of your screen. Listen, no forecasting is perfect in life. You've been around for a long time, as I have, but these are traditionally deflationary and or recessionary signs. What do you make of it, and what does the stock market make of it?
Well, we thought that there would be a lot more demand, in particular for the softs, some of those commodities that are part of that CRB and so forth, because the war in Ukraine. I mean, an awful lot of grain comes out of the Ukraine, so you would think that many of the U.S. producers of oats and wheat would be just booming. And instead, they're down on the year. Down on the year, despite the fact that it's really difficult to get anything out of Ukraine. Russia likewise, obviously. And so where did all the demand go? And why are these inputs down and the prices are up? It sort of begs that question, too. Right.
So can you say the same thing about oil and energy? I mean, natural gas has really plunged. That's a surprise. But so the Saudis and Russia and OPEC Plus cut 1 million something barrels of production, or so they say, and they're considering another cut. But you don't see it. Oil prices are, I'm going to say, $70 a barrel, more or less. I mean, that's a lack of demand, a lack of something. I don't know what it is.
I think people have already cut back. We've seen a lot of trading down go on, trading down from, for instance, the dine-in restaurants like Cheesecake Factory and so forth, to places like Chipotle or Wingstop. That's been happening all year because the consumer's feeling, you know, the pinch. Their credit card debt is this high, and they've worked through their savings. Not everybody, of course, but the big swath in the middle have worked through their savings. So that tells me that the recession could go deeper depending how much higher the Fed chooses to take interest rates.
Yeah, well, that's an interesting point. I think the market expects them to go 1/4 point. I don't really know if they should. I mean, if I were they, I'd pause, but whatever. I'm not going to get excited about 1/4 point. The question, John, is what happens in the stock market? What kind of advice do you give investors? It is a precarious economic story right now.
Right.
How do you play it?
Well, you don't need to be early. So I do think we're going to see rate cuts by the end of the year. I think in the fourth quarter we're seeing rate cuts because of all those charts you just showed. When you've got 2s over 10s, the yield on those being so much higher, that's a sign of recession coming. And it is usually pretty accurate predictor of that. So I think we're going to see a lot more pressure on the consumer, and that's not going to be good in terms of what Jay Powell and the Fed are doing.
Do you get out of consumer stocks?
I think you get out of the higher end consumer stocks. I really do. And boy, just look today, advanced auto parts tanked like 33% in a day.
Really?
Yeah.
Why? I thought car sales were okay.
The car sales are okay, and they're still getting revenue that matches what the street was looking for. But I think they earned like 72 cents versus the street was looking for 260 on the bottom line. So it's a huge miss because they couldn't pass on the prices to the consumer. Some of these manufacturers or retailers are having to eat that piece because they can't pass it on. The consumer's just saying, nope, I'm going to go buy it on Amazon. I'm not going to buy it here.
John, what do you make of, it's a related story, the NVIDIA story. Now, we had Kathy Wood on last week.
Brilliant lady.
Yeah, she is brilliant. Right? You're exactly right. And she loves the story. She loves the AI story right now. She loves the AI-related stock story. But I'm reading a headline from Reuters. NVIDIA short sellers torched for $2.2 billion after the stock hits a $1 trillion market cap. So the short sellers got torched. Now, what do you think of that?
I'm not surprised.
That's life in the
Yeah,
fast lane.
I mean, they were shorting it into the earnings last week when the stock was, let's say, 380 or whatever it was, less than that, 350, and it boomed through 400. Now it's pulled back rather significantly in the last day, but AI, it just captures people's imaginations. They know that the companies are going to be using it, and I'd throw out there that AI itself, the parent company of ChatGPT that Microsoft has the big investment in, they have earnings tonight. It'll be their guidance, just like NVIDIA's last week, that could take that stock on a similar moonshot, and they've got a 30% short interest. NVIDIA had one.
Wow.
1%
30%.
short interest.
Oh, they're setting up for
Yeah,
big fall.
that's one of those you want to watch.
So the AI, we got to go, but the AI play is intact. That's really not a recession. I mean, it doesn't care about recession.
It
AI,
doesn't. In fact, people will flock to it because of recession, because they can cut back on spending on employees. And that's not something you want, because that accelerates that basically ball going downhill with people that are looking for jobs. All of a sudden, you don't need them.
You got it. Yes, sir. Jon Najarian, pleasure. Hope
Thank you,
come
Larry.
back.
My
Appreciate it
pleasure.
very much.